China has been flexing its muscles in terms of its control over critical mineral exports. It has applied restrictions, and apparently that rapidly got the attention of the White House. US President Donald Trump says the talks with China have produced an agreement under which Beijing will lift some of those controls. But this is a major vulnerability for industries around the world. China's control or near control of our processing of these materials. Where does it leave Canada's critical mineral strategy? We're joined by David Anonychuk of SGS, which is a testing and certification firm. It's great to see you.
Great. Thanks for being here, Andy.
You have a pretty good perspective on the entire commodity complex. Now, the International Energy Agency just came out with a report on critical minerals. We can show a few of the findings. You help peer review it. But one thing that jumps out, I think, is that the world has made very little progress yet in diversifying sources of supply, reducing China's dominance.
Yeah, no, that's correct. Yeah, we were very privileged to be invited on that, to be a peer reviewer for that International Energy Agency report. There's global, major mining companies, battery manufacturers, industry associations. So we're very happy to be the only testing, inspection, and certification company to be asked. And one of the key findings was the concentration of production of critical minerals and rare earths, predominantly coming out of China. Mm-hmm. And over the last few years, from 2020 to 2024, that concentration increased from the top three producers of any of these key critical minerals from 82% to 86%. So it's not in line with what a lot of countries wanted to do in terms of diversifying their supply chains. It hasn't happened. And if we look at the top 20 critical minerals that are being produced in the world, China is the dominant producer of 19 of 20 of them. And then the only one missing in that group is nickel from Indonesia, which is perhaps not a surprise to anyone to hear that. So that does leave potential vulnerable supply chains to others in the marketplace.
If we look at metals like lithium and cobalt, they have plunged from their peaks over the past couple of years, partly because of new supply from places like China or Democratic Republic of Congo. But that has discouraged investment in new sources and processing because of those low prices?
Correct. And the IEA report, goes into some detail about that, saying, commodities like I said, cobalt, lithium, nickel, because of the lower prices, it is having an impact on investors' views. They need to have some incentive for them to come back to the market. But the other thing that's affecting investors is the fact that the tariff policies are changing. People want stability. They want something that's predictable if you're going to, again, also to get investors to come back. But is it all bad? No. The report also acknowledges that if we look at EV sales, which pulls a lot of these critical minerals, EV sales in the first quarter of this year grew in the United States, it grew in the EU, and it grew strongly in China. And then if we look a little further out towards now to the end of the decade, EV sales are actually forecast to grow at 15% compound annual growth. So that's quite strong, quite positive. And we're going to need some $500 billion of investment just to bring mining projects on stream between now and the end of decade. And the one as the most concern in the report is copper, actually, because more than half of that $500 billion of investment will be needed just for the copper industry alone. By 2030 to 35, we will have large deficits in terms of the copper industry, which is positive from an investor sentiment point of view. And that's why we see even copper strong today in the market.
So tell us about SGS. What are you doing in terms of helping Canada to set up a supply chain here?
Yeah, SGS, we're a global company headquartered in Geneva. We are a leader in testing, inspection, and certification around the world. I'm fortunate to be in the minerals team. And in fact, we have a center of excellence in Canada, actually in Lakefield, Ontario, in our lab. And we do a lot of process development. We work on hundreds of projects in North America and internationally in gold, base metals, but we're also excellent in terms of developing these critical mineral and rare earth projects.
Canada doesn't have big rare earth mines yet. There have been various, of course, exploration and development companies. But I guess another problem here is going to be the processing. It's capital intensive and it takes a lot of expertise.
Well, that's why we're seeing, I'll say the U.S. administration is probably doing us a favor right now. Every time they visit a country, in terms of looking at rare earths, they're talking about Canada's Arctic, they're talking about Greenland, Ukraine, and of course this deal that they're trying to advance with China right now. That is actually, we're seeing a lot more lead generation in terms of interest in anyone who has anything to do with rare earths, whether it's a potential deposit or maybe they have rare earth residues in something that they're already producing. So I just say it seems to have awakened the rare earth projects right now. And by the way, we did see some announcements where, for example, Defense rare earth company in British Columbia, they came out with a press release that they had some funding from EDC. I believe it was 250 million support. And I do expect to see more announcements in terms of these rare earth projects in Canada strengthening their ties either in provinces or with the federal government.
It's going to be hard, though, isn't it? The Chinese have built up such a lead and such a deep base of expertise here.
Well, one of the concerns from a supply chain point of view is the fact that China has put these export restrictions in the last 18 months, and they do have some leverage in that. Right now, if you look at all the EMs, the things that are hard to pronounce, germanium, gallium, and other ones like antimony, those are used in semiconductors, solar panels, and in defense for like night vision goggles. These are things that the U.S. really needs from that point of view, but we're going to need a commitment to diversify, supply chains away from China because investors don't want to see supply chain risks or, shocks or the risk of volatility in prices because, again, it scares investors away.